Welcome back. Let's take note of a couple of stocks which are in focus, and that's primarily on account of their second quarter updates. The first one is Avenue Supermarts, the one that I'm looking at right now. And that's because, Nigel, they've given their second quarter update and it looks rather strong. It's the first time that the company on a standalone basis has crossed that 10,000 crore mark in their top line. So that's a 35% jump year on year and a roughly 6% jump quarter on quarter as well. But the interesting part is that the first half of this year, they've opened 18 stores, 10 in the first quarter, 8 in the second quarter. Analysts are pegging anywhere around 40 to 50 stores being added every year. So they're on track for that. And in the last 3 years itself, they've added 118 stores. They have almost 302 stores right now. And the reason why, this is important is because the last 3 years were pandemic and the last 3 years were marred by a lot of one-offs, etc. Going forward, assuming and God willing there is no pandemic or any sort of uncertainty, this 30% of the company's overall ecosystem will start to deliver growth, and that provides it the kind of headroom that the analysts are penciling in. However, the only fly in the ointment for Avenue Supermarts has always been, ever since it's listed, has been the valuation. So it's 25% off its 52-week high, but still trading at extremely expensive valuations. But if the company can go ahead and deliver the kind of growth that it has been over the last couple of quarters, then maybe the valuations will sustain.
All right, Mangalam, thanks a lot for that. Well, let's focus on Vedanta. They came out with an operational update. Normally doesn't move the needle too much for them, but it looked pretty okay. If you're looking at the aluminium business, the Jasukta facility, well, out there you had a good growth of closer around 5% approximately. So that aluminium, remember, is bulk of their business. I think we should get some of these numbers up for you on the screen. 2% higher on a sequential basis as well, but Jasukta was up closer around 5%. The alumina refinery as well, that was struggling a little bit. So let's see how that impacts margins. Moving on to the integrated saleable metal, that's both zinc as well as lead put together. Out there was a good bump up of closer around 18% on a year-on-year basis. So that's pretty good going. And the saleable silver production, well, that is up by closer around 28%. So that is Hindustan Zinc, basically, both these two numbers. Moving on then, if you're looking at, the power sales, that as well was quite impressive. And out there as well, TSPL, well, out there, there was a good growth of more than 50%. And that's closer around 80% of the total volumes on the power side of business. So that as well was a positive read-through. A smaller part of their business is the international zinc business. Out there, Gamesburg, that's ramping up nicely. And that's why you had a growth of close to around 35%. Oil and gas continues to struggle a little bit, not yet been able to ramp up. But I think the street pretty much factored in that. The reason, though, that metals are doing well today is because of a couple of factors. Overnight, we did see that dollar index did cool off, and the yields as well on US bonds, they cooled off a little bit. So both those two are normally positive for commodities on the whole. That explains why the stocks are moving higher. Well, a number of business updates have also come in from banks and financial institutions. Abhishek joins us to run us through more of that. Abhishek?
Well, to begin with, IndusInd Bank has given the business update wherein they have gained market share in the loan book. So sequentially, that is quarter on quarter, deposit growth is perhaps the best in 5 quarters and loan growth is the best in last 4 quarters. So deposit growth is of 14.7% YOY and about 4.2% sequentially, while the loan growth is at 17.6% YOY and about 4.7% sequentially. For the first time, M&M Finance has given a number on their asset quality in the business update. So the gross NPA over there has improved to 7% when compared to 8% in the previous quarter. Disbursements remain strong. For the month of September, it was close to 4,100 crore, which is up about more than 9% on a month-on-month basis. The collection efficiency has improved 98% for the month of September when compared to 96% in August and 96% in June. HDFC Limited, the loans assigned is up 28% YOY but down about 4% sequentially. The dividend income was strong, up about 16% YOY and 98% quarter on quarter, while the individual loans sold is up 27% YOY and about 6.2% sequentially. On HDFC Bank, the loan growth has surprised positively, perhaps the best loan growth in 14 quarters on a YOY basis. So deposits are up 19% YOY and about 4.3% sequentially. The loan growth is at 23.5% YOY and more than 6% quarter on quarter. X of the pool that they have with HDFC Limited, the loan growth remains strong at 23.4% YOY and about 6.2% sequentially. The CD ratio has also improved, which indicates that the net interest margin may remain healthy. Back to you.
Take that point, Abhishek. Thanks a lot for that. So with that, we wrap up on this edition of Chartbusters with the news that we did have a fair amount of updates for the second quarter. The market's looking not so bad. The Nifty virtually at the high point of trade. Stay tuned. Trading Hour comes up next.